8 money-saving tips for freelancers and the self-employed. There are numerous reasons to pursue a career as a freelancer. You may have made the decision for yourself, or it may have been forced upon you. Either way, you are not alone. You must manage not only your personal budget but also your business budget if you are self-employed or a gig worker. As your own boss, you will be responsible for your own finances, insurance, and retirement savings. Your financial situation does not have to be erratic simply because your paycheck is. Here are 8 ways to keep your financial situation stable even if your income fluctuates. 1. Keep detailed records of your time and expenses. Time is money as a freelancer. Keeping track of how you spend your time and money not only helps you bill clients correctly, but it can also reveal which areas of your freelance work are the most and least profitable. This can assist you in improving your bottom line. And, because you must track your time, find a system that works for you. Look it up on the internet. There are numerous apps that allow you to easily track the time and money you spend working for various clients or developing your product. 2. Create a monthly budget. It's common practice to begin a budget by noting your net income. However, if your monthly income varies, it is best to begin with what you require to survive: rent or mortgage, utilities, car or student loan payments, groceries. You may also want to create a second budget for one to have items such as dinners out, weekend trips, or a new smartphone. If your line of work has a busy season, plan to save more during those months so you're ready when your income drops. Don't forget to include savings and retirement planning in both budget options. More information can be found in steps 3 and 6. 3. Create an emergency fund. Salary employees should set aside enough money to cover at least 3, ideally 9, months of expenses in case of a financial emergency, according to experts. However, if your paychecks vary, you should consider covering 9 to 12 months. This will provide you with a buffer if you are between projects or face an unexpected expense. Aim for the higher end of the savings spectrum if you have dependents or fixed expenses such as a mortgage or car payment. 4. Be an excellent bookkeeper. Being self-employed and working from home allows you to deduct expenses such as travel and a home office. Keep track of expenses like printer paper, ink, gas, and tolls. You'll need them for tax returns and any potential audits. You may have a lot of invoicing to manage if you work multiple jobs. Investigate available software programs and services designed to assist freelancers in keeping track of invoices and client payments. 5. Submit quarterly tax returns. The IRS generally requires that you file estimated quarterly taxes if you are self-employed and expect to owe $1,000 or more in federal income tax and meet certain other requirements. This is in contrast to the days when you received a salary, or wages, from your employer, who would withhold taxes from your earnings. Even if you are not required to file quarterly taxes, doing so allows you to pay your taxes in smaller increments 4 times a year rather than having to save up for a large lump sum. The process of calculating your quarterly tax payments is simple. The amount you pay to the IRS is generally based on your estimated annual income, plus Social Security and Medicare taxes. The majority of people begin with their previous year's taxes. For more information, consult the IRS's estimated tax rules, and if you're unsure which rules apply to you, consult an accountant. 6. Put money aside for retirement. As your own boss, you'll have to manage your own retirement savings, and you won't have perks like matching funds to motivate you. Individual 401k, Roth 401k, and Roth IRA are among the retirement accounts available to freelancers. To keep your savings and investment plan on track, set up automatic transfers from your checking account to your retirement account. Simply ensure that you have enough money each month to cover the transfer. Also, whenever possible, consider contributing to your retirement account with windfalls such as tax refunds or large client payments. 7. Get insurance to protect yourself. If you are unable to work due to an accident or illness, disability insurance can provide you with income. While you're out of work, the income can keep you from going into debt to cover your basic expenses. Make sure to get a policy that includes an own occupation rider. Without it, your insurance company may refuse to pay your benefit if it believes you can still earn money outside of your current occupation, which could be at a minimum wage job. On that note, you are also responsible for your own health insurance. If you're a gig worker or self-employed person, it's a good idea to review all of your insurance needs on an annual basis, from life and homeowners insurance to considering an umbrella liability policy, to ensure there are no gaps in your coverage. 8. Consider opening a separate bank account. Setting up a separate account for your freelance business can help you keep track of your earnings. Consider opening a small business checking account, which will provide you with tools for tracking your business expenses. Transfer money to your personal account to pay yourself a salary. This configuration can be especially useful when tax season arrives. The documents required to apply for an account, as well as the type of account you qualify for, may differ, so do your homework.